Hey, what's up traders? Welcome back to our channel here at TradePro Academy, and I've got a special video for you guys. My favorite TradingView indicator for the year 2025. Now, this indicator is very special. I've been using it over the past few years just to get a very good understanding of it and see its worth. It's an indicator that allows you to identify from an order flow perspective where you have extreme overbought or oversold based on market orders. Now, this works for futures day trading, it works for day trading as well in general, as well as for swing trading and even investment ideas. So I'm going to be breaking down this indicator fully as we get back to our screens. So if you guys are super excited about this for this visual order flow indicator on TradingView, remember, stick around, hit that like button, drop a comment down below, and hit that subscribe button. Now, if you guys are new, check out TradeProAcademy.com, but better yet, check out community.TradeProAcademy.com for our open Discord where we have a bunch of trade ideas and resources 100% free for you guys. So let's jump in front of the screens and see what we got cooking with this indicator. Hey, what's up everyone? Welcome back. We're back at the screens and we're going to be breaking down this indicator in TradingView, what I think is one of the best indicators that everyone should take into note for the new year and just going forward. So I'm going to break down overall what it is naturally and kind of what it means. TradingView, when people publish their indicators, they make them available. They have a breakdown description that they should jot down really to explain as to what's going on. So first and foremost, right, without babbling too much, the indicator is called Leviathan's Market Order Bubbles, right? Market Order Bubbles by Leviathan. You can see it right here. If I move this guy a little, you can see right here, this is what it's called, right? Market Order Bubbles by Leviathan. And naturally, every description here on TradingView is easily found, right? This is what it's called, market order bubbles by Leviathan. And to get a better understanding what Leviathan has done here, you can read this breakdown of what goes on. I think it's very important before you use any indicator, before you use any script, whatever it is on TradingView. Now, like any indicator or any script that's available out there, this is not like, it's not a standalone situation. This isn't a standalone deal over here where you have one thing and all of a sudden holy grail is achieved and everything is perfect and you're just slamming on massive size and making billions of dollars. That's not how it works. This indicator, right, it's fantastic for any type of trading that I've found. I use it for swing trading, for investment ideas, for the long-term entries. I use it for day trading as well, and I'll break down a little bit of how to kind of guide and use it for all of these, specifically for day trading in terms of futures, because it's like a certain type of order flow indicator realistically. It's based on market orders and some kind of assumptions that naturally should be made. You can see what it is, right? The script is based on calculations that use volume data, imitation of CVD, and price action estimates where there is a surge in the quantity and magnitude of market buy and sell orders. So these occurrences are visualized with circles, right, bubbles that appear above the bar, which are market buy orders, or below the bar, which are market sell orders. Most of the time, the approach to interpret the bubbles is contrarian, right? Meaning that the appearance of market buy orders can serve as confluence to look for shorts, and the appearance of market sell orders can serve as confluence to look for longs. So when I show you this indicator and some of the settings that I use, it becomes a little more evident. But I think that everyone should read this, right? I'm not going to read all of it, but the concept behind the contrarian approach, look at this. So market buy orders appear above price, possibly signal the following: short positions being liquidated, meaning exit short equals buy order. New traders entering late longs based on FOMO, right? Enter long equals buy order. Smarter traders getting their limit sell orders filled by aggressive buyers, stopped out shorts. Possible reversal to the downside, short-term pullback, start of raging price action, right? All this is displayed. I'm not necessarily going to just dive into every single aspect. You can easily just Google this and find that. But this is what it looks like, right? These are what the bubbles look like. I did change some settings, and I'll explain why. But you can see right here, this is on NVIDIA, for example. You have a few select larger, well, I guess like just red market bubble orders, and they're kind of far and wide realistically. You have the April, like late April ones. You have some here at the beginning of August, late July, and then the most recent ones, which come out on Tuesday. So on Tuesday, I mean November, end of November. So what I'm looking at here is pretty much exhaustion slash oversoldness in the market, right? From a swing and investment perspective, realistically, the way that I view things is looking at it from a long perspective, right? So I'm looking at these positions, and what I'm trying to identify is where the markets are extremely oversold. And in that situation, I'm only actually using the sell order bubbles. So again, this is for longer term positions and swing positions because I'm just looking for the aggregate aspect to the upside swing. Because if I look at this and let's say we put in the buy orders, right? Because I made it, you can see here in the settings, I had made it black. But the thing is with the aggressive buy orders, right? Markets, there's a lot of bullishness necessarily associated with market momentum. So like if I put these like buy orders, for me, I think it's a little deceiving to see where markets are a little overextended to the upside. The way that I view it is that, like, not that I'm like, oh, perma bull, but there is, especially on like the indices and like larger names, I generally tend to look for the longs, right? I like longs on the swings. And if I'm looking at things that are oversold, quote unquote, it's a little easier in that regard to find or pick bottoms than it is to find where a top is, because you can see all of the areas where markets are overbought, right? Like there's situations where there's continuations to the upside severely, so these can be a little misleading. But I'm saying this for the swing trade perspective, right? For the day trade and the swing trade perspective, I'm mainly looking at information that allows me to identify where markets are oversold, which is based on the red bubbles. Like we said, it's aggressive selling, and it can be construed as people getting stopped out. It can be construed as late shorts. It can be construed as closing out long positions, people that are trapped on the short side, whatever the case is. It gives you a market order perspective from the market based on any market, right? There's obviously a few different thresholds. You have standard deviations and EMAs that appear in this as well. So it's not only market order based. You can play around with these and see, right, if you increase or decrease the length, what information you get from there. I just keep it at 30 and 30 on those settings. So it's similar to kind of order flow, especially since coming from a mainly futures trading background. When I see people that are super aggressively going in on the short, and there's no continuation and reaction, I want to see something like that so that I can start looking at this from a long perspective. So it's very similar as to how this is set out over here, with me getting rid of the green orders, right, the buy bubbles, by just simply making it like a dark black background so they're just gone. You can change the position, obviously. I don't really care about that. But one of the main things that I'll do is I'll only use the large and the medium orders. I think I might have actually increased the size of these, right? You can increase the threshold. So I'll keep the large bubbles at 4.5 and then the mediums at 3, and then I'll keep both of these so that I can have only the largest positioning based on, right, the criteria that comes out. So I'll use these settings for pretty much everything, right? Whether it's a daily chart, like here, for example, we have NVIDIA on a daily chart. So whether it's a daily or I'm looking at it from a swing perspective, I can look at like an hourly chart or whatever, but like the daily's great. So like NVIDIA, again, right? These are things that I use with different tools as well. It's not a standalone. But when I'm like talking about like investments and I'm like, oh, I like these like long-term positions, for example, like if I want to get along like VOO, well, VOO, it's based on the SPY. So like if I look at the SPY, for example, and I'm trying to get long SPY, just like a longer term, and I want to just throw chunks at it, right? I can look at where there's an accumulation of people that are getting absorbed into the lows and like a little trapped. So like you can see all of this accumulation down here. So like when I start to see stuff like this, I'm like, okay, well, 497 on the SPY. This was late April. I can start positioning into VOO for the long term, right? I like it on individual stocks. Again, right, this is not my only criteria for investment or to get into a position, but it does surely help, right? Especially with swings as well. So like if I look at it on this most recent dip here, this was at the like late October, and I'm starting to see that there is aggression and absorption into these lows. right at a key area, right? Because I do like this area. I like it. There's a volume profile drop off, a big distribution here. If you look at it from the larger perspective, right, you can see around 467, 470 area. So I can look for a swing position based on that. Right. If I look at the hourly, you can see that there is a little more of this, right? In terms of absorption here, you can see the bubbles get a little more aggressive. You see them more often. And again, right, this does help a lot with the swing basis, whether I'm taking a position in equities or options. So again, like I'm saying, like I bypass these like excessive market buy orders and I'm just looking at the extreme market sell orders. So like no matter what type of stock I might look at. So one of the most recent swings that we had that I was talking about for a very long time was Microsoft. And like one of the reasons, not the standalone reason again, is going to be based on where these guys get extremely oversold. So once these guys get extremely oversold, I want to wait to see, okay, what are some other criteria I can come up with rather than being like red bubble buy, right? So we have the bottom of this larger auction from the yearly, right? The yearly distribution lows sit around 400 to about 405. When I start seeing the aggressiveness of people getting oversold based on these market orders, they help in terms of qualification that I can look to get long Microsoft, right? So this was a swing position most recently endured. Now, Meta, I think, is another one too. So Meta here, we have this, I use auction theory a lot. So like auction theory, we have a new auction imbalance here into the highs. The bottom band is around 556. So once I start seeing people aggressively getting into these areas and they're like failing, they're getting absorbed, for me, okay, that opens up the criterion idea for a swing, right? Tesla, one of the most recent movers here. We haven't seen any massive oversold market sell orders. So you might say, okay, well, shit, I just missed this massive run on Tesla. Again, not a standalone tool that should be used, right? Something with auctions, something with whatever the hell you guys use. I just think that this is a great qualifier for, I guess, like hunting and like looking for positioning that might be overextended or overdone. Now, from the day trade perspective, this is where I do like it a lot as well, right? Specifically on like the futures aspect of things. If I go into the S&P 500, right, on a day trade perspective, if I go to a 1 minute or like between a 1 and a 5 minute chart, right, on the S&P, this is where this thing is very attractive. Like this is the example of a 1 minute chart. So the 1 minute chart actually, here, let's actually use it different because it's not set up right. I'll talk about it for day trading here. So for day trading, this indicator, you have NASDAQ on the top and S&P on the bottom over here. The thing is, though, I'll use both for day trading on the intraday. I'll use both the market buy and the market sell because on a very short time frame, this indicator has a lot of effectiveness realistically. So on a 1 minute, 3 minute, 5 minute, I think there's a fair representation of this indicator to allow us to identify who's oversold and who's overbought. So you can see these are my settings. This is for the day trade aspect for NASDAQ and the S&P. You can try it on any futures asset. But these are the settings, right? Large market orders are at 4. And the only ones I use are large ones, both the buy and the sell order. A standard deviation threshold, I changed to 40 and the EMA threshold at 30. So like, for example, when these guys start populating on the day basis, ideally during the RTH session, right? The regular trading hour session, you can see what goes on. So when I start to see the population of people getting trapped on the long side or the short side, I start to look at it a little more interested. So for example, if I'm looking at the RTH only, right, let's see if we can group these guys together. Where is this? Let's say somewhere like that. So like the RTH on both of these starts somewhere around here, right, and ends somewhere around here. So we can maybe move this NASDAQ a little. So you can see, okay, NASDAQ and the S&P, this is the RTH start and then RTH end pretty much. So this was from yesterday's trading session. So immediately off the open, right, the S&P again, right off the open, just take it with a grain of salt, give it like a few minutes to settle down. You get this like super aggressive market buy order, okay, whatever. Over here in NASDAQ, the first time this thing prints is a super aggressive market buy order that steps in, and then we start holding out this resistance area. You start to see the accumulation of these like market sells. And again, right, if I start buying, for example, 520 on NASDAQ over here, just based on this individually, right, then again at 500, then again finally at like 480, it's not going to paint the best picture, right? Again, looking at this strictly by itself, I think that just like any other indicator, you're throwing yourself to the wolves. I don't necessarily think that that's the way that this is intended to use. Look at it from another perspective and use this as kind of a support tool. So like I know that over here somewhere, realistically, these guys are getting oversold, and I know I have a level at 490 to 480 on the NASDAQ. So realistically, when these guys get overdone at this point, I can look to ping this long, which works pretty well in this scenario. Same thing here with the S&P, right? They get pretty stuck around like 90-ish, so I can ping that long. I'll get a nice little 10-point move from that. And mainly, right, the first instance of this indicator showing up is actually oversold. So here at these tops, if I'm to sell 560, right, I'm pretty much just taking profit where these guys get overbought. So that's one of the ways to look at this thing, right? If I'm looking at it from prior days, again, during the RTH, even on the ETH, you can see it picks out the tops and the bottoms pretty well in terms of overbought and oversold on an individual day basis, right? You can look at this from the perspective of the prior ETH here on the NASDAQ and the S&P. Let's just pull back into it. This is, here, let's zero in on the start and the end again. So this is pretty much the start and the end for both the sessions, right? I don't necessarily see too much aggression until we get to this spot over here on the S&P. And again, right, it starts off pretty quickly to this area. So I know, okay, once we get into an area that I care about, what's the area that I care about? Realistically, it was around 6075, right, based on auctions. And I can show you where that comes from as well, just so you don't think like, oh, this guy just picked out the freaking bottom of this area. Like, what an idiot. But so let's take a look at this from an auction perspective on the S&P to prove this point. So if I'm looking at the area, realistically, the auction profile, sure, but I'm mainly looking at the prior days because we were trading at an all-time high, the volume drop-off. So realistically, I'm looking at somewhere between 73 and 75, right? That area realistically should hold. People should get oversold. Massive volume drop-off on this ledge over here. So point proven ideally. So if I'm looking around 0.75, I'm not going to just blindly get long at like 82, right? So I'm mainly looking for that area. If they get oversold towards that region, I know, okay, you know what? Like this is an extra qualifier that I can get long into this position. On the NASDAQ over here at 450, right? Again, same criteria. If we pull up the auctions that I look at and a lot of information that comes from them, 450 area on NASDAQ based on the auctions. Let's see where that is. That happens to be 450 right here based on this auction, right? Where is that? Sorry, I'm getting a little confused here. We have the volume drop off, so realistically it's somewhere over here based on that information. So realistically we have this nice volume ledge over here. We have a heaviness of volume. So 450 should be an area that we should be interested in. A lot of people get absorbed into that region. Okay, fantastic. I have a double confirmation. So again, right, just like anything that you use, these things shouldn't be standalone. They should be taken more with a grain of salt. You could be using them for day trade perspective, from a swing, from a investment standpoint. And the beauty of this is that these indicators, they help you realize where things are getting oversold and overbought. Now, from a day trade perspective, I look at it from the idea of oversold and overbought. But from a swing and investment perspective, I'm mainly hunting these guys to be oversold. So that means that I'm very much situated into where the aggressiveness of the sell side comes in, where they appear to be trapped, and if there's other criteria that allows me to see a potential positioning and idea from there. So like whatever stock I look at, or whatever index I look at, if I'm thinking of taking a swing position or a longer term position, this could be one of those helping factors that allows me to be like, oh, okay, you know what? This looks like a pretty decent long area. Like, let's take like Home Depot, for example, over here. So Home Depot, I like it only for me to buy on the long term. I don't necessarily swing trade it that much, nor day trade it. But if I'm looking at this, I know, okay, over here, they're oversold. Over here, they're oversold. So if I'm buying a position for the longer term from a 10-point increment, it doesn't matter too much. But if I'm looking to swing it, right, then I start involving different criteria. On the day trade perspective, I'll show you the settings for the market buys and sells on the day trade in 1 minute to 5 minute, and then on the swing and invest longer term on the daily chart, I'm mainly looking at these guys oversold. So I think every year I show you guys a different indicator. I think this is the one for the past decent bit, right? We've looked at volume profiles, we looked at Delta on TradingView, but I think this is a fantastic indicator that everyone should first read, right, the breakdown and description, and then start looking at it from the perspective, play around with it. All indicators on TradingView that are public have settings that you can go through and make them a little more malleable. So I hope you thoroughly enjoyed this video. Getting ready for 2025, I think this could be a great thing to have in your arsenal, and I'll see you guys in the next video. Remember to drop a comment down below, hit that like button, hit that subscribe button, let me know what else you guys want to see from me.